Video title: The Intersection of Psychology and Wealth in Behavioral Finance. Greetings from Australia. Please subscribe to our YouTube channel for the latest content for your success. In the realm of personal finance and investment, success isn't solely the result of technical know-how or the meticulous analysis of numbers. An often overlooked aspect that plays a crucial role in financial decisions is the human mind itself. Behavioral finance, an interdisciplinary field combining psychology and economics, offers profound insights into how emotional and cognitive processes influence our financial behaviors and decisions. This video explores the essence of mindset in financial success and the pivotal concepts of behavioral finance, providing strategies to overcome common psychological pitfalls. The psychological foundations of financial decision-making. Behavioral finance challenges the traditional assumption of rationality in economics, arguing that individuals are not always rational actors but are influenced by biases, emotions, and social factors. This deviation from rationality can lead to suboptimal financial decisions, affecting personal wealth and market dynamics. Understanding the psychological underpinnings of these decisions is the first step toward mastering them. Common behavioral biases in finance. Overconfidence bias: the tendency to overestimate one's knowledge or ability, leading to excessive risk-taking in investment decisions. Loss aversion: the fear of losses that is psychologically twice as powerful as the pleasure of gains, often resulting in holding on to losing investments for too long or selling winning investments too early. Confirmation bias: the habit of seeking out information that confirms one's pre-existing beliefs while ignoring contradictory evidence, leading to ill-informed investment choices. Herd mentality: the propensity to follow the crowd into investing trends, which can inflate asset bubbles or exacerbate market crashes. Cultivating a growth mindset for financial success. At the heart of overcoming these biases is the development of a growth mindset, a concept popularized by psychologist Carol Dweck. A growth mindset embraces challenges, persists in the face of setbacks, and views effort as the path to mastery. In financial contexts, this means embracing financial education, continuously seeking knowledge about personal finance and investment strategies to make informed decisions. Learning from mistakes, viewing financial setbacks not as failures but as learning opportunities to improve future decision-making. Patience and long-term perspective, focusing on long-term financial goals rather than being swayed by short-term market fluctuations. Strategies to mitigate behavioral biases. Awareness and education. The first step in overcoming behavioral biases is awareness. By understanding these biases, individuals can recognize when they're influencing decisions and take steps to counteract them. Diversification and risk management. Diversification is a practical strategy to mitigate the impact of emotional decisions on investment portfolios. By spreading investments across different asset classes, individuals can reduce risk and avoid the pitfalls of putting all their emotional eggs in one basket. Automated decision-making. Automating financial decisions, such as regular contributions to savings accounts or investment portfolios, can help circumvent emotional biases by committing to a predetermined plan. Seeking professional advice. Financial advisors or behavioral finance experts can provide an objective perspective, helping individuals make decisions that align with their financial goals and risk tolerance. Conclusion. The journey to financial prosperity is as much about mastering the mind as it is mastering the markets. Behavioral finance provides invaluable insights into the psychological barriers that impede financial success. By cultivating a growth mindset, becoming aware of and mitigating behavioral biases, and employing strategic financial planning, individuals can navigate the complex interplay of psychology and economics to achieve their financial goals. Remember, in the world of personal finance, understanding the market begins with understanding oneself. Thanks for watching. Don't forget to subscribe to the channel for your success. If you like this video, please give it a thumbs up,